we'll just fire off, right? Well, good evening, everybody. Welcome to Your Property Investing and our Mastermind webinar tonight. Tonight, we're going to give you a general overview about where we see Melbourne, the Melbourne property market, what's happening out there. We'll talk on interest rates. We'll talk on the builder's situation, material supplies, and a whole range of things. And the idea of tonight is we just want to get in and debunk what everyone's seeing in the media, because the group that I've got on tonight, I'd just like to welcome them in. I've got Zach Glenister from Luxton Homes. Welcome, Zach.
Thanks, Tony. Thanks, Amy.
Great. We've got Liz Licari from Unique Property. Hi, Liz. How are you?
Hi, Tony.
Good. And Lisa Casella from Collective Finances. Hi, Lise.
Hi, Tony. Thanks for having me tonight.
All cool. All cool. Folks, this is just going to run for probably 30 minutes. We're not going to waste a lot of time here. At the end of tonight, I'm going to tell you about a property mastermind dinner that we'll be putting on Wednesday, November the 9th, for people that want to have a look in a bit more detail and show that you're qualified and serious about wanting to invest. But let's get a bit of a start off about what's going on in the property market, what's going on around Melbourne, where do we see some good property opportunities coming up, not only towards the end of this year, but also into 2023 and beyond. And we'll also share with you some of the observations that we find in, especially in the areas of finance. Glenn will talk to us about what's happening in the building sector, and Liz will give us a little bit of an overview of some areas and some places that are doing really, really well. So I'm pretty excited. We've got a pretty good night. So let's fire it off. Look, I've been banging on about the media for months. If you're following me, you're on my database, you see these emails. And look, I said, it was only about 2.5 weeks ago, we've seen all the media headlines, Melbourne's crashing, the markets are coming down, blah, blah, blah. And guess what? A week later, guess what they did? The headline comes out, 279 suburbs in Melbourne are still going up, right? So my point being here is they're going to swing from one thing to the next. They're going to bang on about interest rates. They're going to bang on about inflation. They're going to bang on about the property industry. They're going to bang on about builders. Stay away from the media, okay? We're going to give you some really good nuts and bolts tonight. We're going to generalise it and overview it. So what we might do, I've got investors who are buying now in areas where we still see good capital growth going on. We're getting valuations coming in over value. Lisa does a lot of the finance work with banks and lending. So I think we'll kick it off. I think first we might throw over to Liz. Now, Liz, you've been around the property space for, well, how long, Liz?
Oh, very short period of time. No, around 19 years now, mate.
Yeah. Look, I want to start off, Liz. Let's just backtrack a little bit now. We went on a bus tour. Look, I think it was 5 or 6 years ago. We took a few people down to Armstrong Creek in Geelong, right? And at the moment, you've got some pretty exciting news about Armstrong Creek. A lot of my clients and investors have bought in Armstrong Creek. Do you want to just give us a little bit of a heads up on, say, some of the things that are happening down there, and also about valuations? I think you spoke to me about the other day.
Yeah, absolutely. Exciting times. Let's just reflect back to when we actually did take that bus trip down there, and lots of people were buying in the first stages of some estates that were there. Way back then there was, if I compare to now, 512 square metre blocks with a 22 square home selling for a package of 480,000. Zach would remember those days as well. However, you can go there now and go and look for the same size block with the same size house, and you're looking upwards of close to 800,000. Those clients are extremely happy, including yours, Tony, that have actually bought there. But a little bit more on Armstrong Creek. I think one of the biggest focuses when we did take everybody there was based around major infrastructure in a brand new suburb. Stages 1 to 3 have been completed in the new town centre, the $1 billion town centre that was going in there, which has generated about 1,100 new jobs. That'll cater for about 58,000 in the population, but that has so much further to go. They've got conference and spa centres, restaurants, cinemas. There's a new train station to go in. It's in its infancy stages of the 11 stages of the town centre. I'll throw this out there when you're asking me, is there still opportunity in Armstrong Creek? If I compare it to any other town or city in the world where you can be 10 k's from the beach and 10 k's from a city and still buy a 4-bedroom home on a 400 square metre block for 750 to 800,000. So, is it still 480,000? No, it's not. But is there still opportunity for growth in Armstrong Creek? Absolutely.
Perfect. Tell me about the valuations. What's the latest down there in regard to some of the valuations we've had come in?
Yes, so last year, and Zach will attest to this, it was a crazy time. We were still selling a lot. We sold 60 in Armstrong Creek last year. Some of those lots are actually settling now. And the good news is I haven't actually had a land settlement that hasn't had the valuation come in. They've all been $60,000 above purchase price, 60,000 or more above purchase
above what people have paid.
price. That's right. And that's
So
in the
they made a
last 12 months.
$60,000 gain.
Yes, yes. So we're not talking 6 years now, we're talking 12 months.
Yeah, it's a really important point, Liz, because people need to understand that when you can get into these right type of areas, and we're going to specifically focus on somewhere a bit later on, and also in November when we do the mastermind dinner, infrastructure is super important. The other thing that I've noticed down in Armstrong Creek, and the feedback from all of my clients and property managers down there, is that the rents are going through the roof down there as well. So not only are you getting capital growth, but you're also getting great rental returns, which is helping the yields. And that sort of counteracts what's going on in regard to interest rates.
Yeah, 100%. Absolutely.
All right, perfect. We might just move on with you again, Liz. The Western Corridor of Melbourne is a major growth area. There's some big infrastructure projects happening through that region. Just give us a little bit of an insight and a bit of a taste as to what you see happening out there and where that might head in the next 12, 18 months or so.
Yeah, I suppose we could stretch that out to being the western and the northwestern part of Melbourne, because, you know, on the far western side, there's the fast rail to Geelong, which, you know, that's a $2 billion project in itself with a 340-kilometre train. And
it's actually $4 billion.
Oh, there you go. And then on the other side, you've got the brand new hospital that's actually going into Cobblebank. That's about 30 k's from the CBD. That hospital has been approved in the 22 to 23 year budget. You know, it's a major project that is going to be servicing the west and the north, and it's going to, you know, when you look at the things that drive our land values, it's always been major infrastructure attracts employment attracts population, and population attracts growth. There's a new town centre going into Cobblebank, just like the days when we started at Armstrong Creek. There's already a brand new train station that's there, but that hospital is going to change everything. It's a massive project. 2024 it'll start and it'll complete in 2029. So if you're using Armstrong Creek as your example, now's the time to get in, not later, not after it's been built, and not even during the time that it's being built. So you've got time now while the market's a buyer's market to be doing deals. You can even get titled lots out that way, but they won't be around for very long.
Absolutely critical points there, and thanks for the insight in that one. Also, I know that not far from these particular areas that we're talking about, there's also a major employment hub, an employment precinct, which is projected, I think it's around about 24,000 jobs over the next 15 years, etc. So
yeah,
the advantage that the clients have got by talking to people like us collectively as a group is that we're on the ground floor. We've got the inside knowledge of where it's at, what's coming up, so we provide all that knowledge and info. So, Liz, great contribution there. Really appreciate that one. One last quick one for you. Tell me a little bit about where you see affordability in that going and sort of into the future, because as we know, house prices are continually moving up, and I don't see any reason why they won't continue to go that way. But there's a real need to create a product around the $500,000, $550,000 mark, which is something that we'll probably be looking right into in more detail next year. But just give a quick insight to the listeners.
Yeah, and look, I'm so sure that Zach can actually touch on this smaller product a little bit later as well from a builder perspective. But there's been a major shift for many different reasons. Interest rates are going up. People are worried if they're going to be able to service a debt of, you know, 750,000 if interest rates keep going up. And let's say, you know, the land they're purchasing is titling in 12 months' time. So there's been a major shift towards smaller land blocks. The land vendors and estate owners are actually starting to reduce the sizes. The councils are becoming more aware of it. The builders are becoming more aware of it under the small building code. But where there's been a little bit of shyness out in the marketplace is, you know, a lack of understanding around whether 3 bedrooms will have, whether there's going to be any resale demand for them. Are they still 3-bedroom homes that fit on these smaller blocks, are they actually going to be able to achieve capital growth like a 4-bedroom home? You know, are they going to be able to get the rental yields that a 4-bedroom home would get? And, you know, recent studies have actually showed, whilst we think that we need a 4th bedroom, there's some key stats that are driving the demographics out in the outer suburbs. One of those being that the fastest growing demographic is actually couples with 2 children. You know, 70% of the workers in the outer suburbs of Melbourne actually can't work from home. The government's actually recently sourced some research to be done, and the data has come back to say that about 70% of them, administration workers, education workers, nurses, you know, working on transportation, driving buses, etc. And as such, they don't need a home office. So we're studying right now the rental yields, as in not the dollar value, but the percentage return. And overwhelmingly, the results are actually coming back that 3 bedrooms across the board right now, because there's actually less of them, and affordability is having a lot of more people want them, the rents are starting to be much higher than a 4-bedroom home, the returns are. So in the future, what we're seeing right now is that, you know, what we're saying is that from an investment point of view, I wouldn't discount looking at a 3-bedroom. If you're worried about not being able to afford something that's 750,000, go out and buy something that's 600,000 or 650,000 right now, and then have the comfort that you're going to be able to service, number one. And number two, have comfort that it's actually going to lease really well and it's going to resale really well. It's the laws of economics. There's a shortage of supply, and in the future, there's going to be a large demand.
Absolutely. Look, being a country lad, I grew up in the country, and I was one of 8 kids. So I think the days of 6, 7, 8 kids in the family are well and truly gone. Well, my dad's family had 13 kids. So those days are well and truly gone. As you said, look, mum and dad's probably only have 1 or 2 kids these days, and it's not cheap bringing up kids, is it, Lise?
No, that's for sure.
You've got a couple of young ones at the moment. So that's pros. Let's go to Lise. Hey, Lise, just give us a little bit of a heads up. One of the challenges that we see with people wanting to invest in property, they've got this fear around, gee, it's more debt, I don't know if I can afford it, But what Lise does is Lise does the finance restructuring for all of our clients. So we look at your home loan, your interest rates, but how do we set up an investment loan? What's the best way to do it? So Lise, what's the latest with the banks? I know rates have moved up a bit. Do you think the RBA is just going to slow down a little bit, ease up a bit now? They're not going to be sort of as harsh as what they were in the first few months of the second half of this year?
Yeah, well, look, Tony, latest economic data indicates that we may have already really reached the crest of inflation rises. On the 4th of October, the RBA increased the rates by 25 points, which was a welcoming surprise, considering the last 4 have been by about 0.5%. Don't get me wrong, there's still a certain level of interest rate pressure. However, flooding nationwide, a slight slowdown in construction and housing, as well as other factors, have really gradually seen inflation slow quicker than what was originally expected. The RBA meeting for this year will be on Cup Day, the last one, and the expectation is probably another 25 basis points, and then we'll have some reprieve as the RBA won't meet again until Feb. So by that time, they'll have a far better indication of where inflation figures are sitting moving forward. So my expectation is that they'll plateau out after Christmas and remain steady throughout 23, and then hopefully a bit of a decrease towards the end of the year.
Yeah, that's the mail I've been seeing as well with some of the stuff that I've been in touch with. So good look. So look, one of the things that we do when we do these investment properties, when we've got good opportunities, people need to act quickly. It's not like we're trying to force people to come on, hurry up, you'll miss out. But the point being is that with the markets that we've been in, we have to make decisions pretty quickly. But one of the challenges I see with a lot of mum and dads out there or potential investors, Lise, how important is it for them to get documents and paperwork to you quickly? Because the banks, we've seen it recently, Lise, people have been caught out, they've been slow at getting paperwork. All of a sudden, there's been another rate rise. When their rate rises, their borrowing capacity has actually come down. So give us a bit of a heads up on, why is it so important for people to move a bit quicker and a bit more swiftly when they're dealing with you and the paperwork, which we know it's a pain, but you got to do it, right?
Yeah, absolutely, Tony. That one's a vital point. It's absolutely critical to be prepared, because what people don't realise, they're not the only people looking out for a good deal. Everyone's looking for a good deal, and they need to make sure that their ducks are lined up in a row. So then when that opportunity comes, they can jump on it. You know, there is a process in obviously getting a loan approved. Some people might need to take equity out of their homes, so they'll need to draw that equity and then apply for a pre-approval to make sure they can service it. So definitely getting your paperwork back to a mortgage broker is definitely a number one key.
Yeah, one of the things that we do in conjunction with yourself, Lise, for anyone that looks to buy, is we get rental appraisals done prior to this so that we can actually factor in rental income and things like that to help the serviceability. One of the things that I do with my clients, I do what's called a PIA, a property investment analysis, which just breaks down the numbers of a property so you can get a bit of a gauge on what do you think this property may cost me per week if I do have to carry it, if it's not positive or run a neutral. Because I think one of the fears that stop people is the mindset of, it's more debt, I've already got my bloody home debt, but gee, now I've got this investment debt, right? But once you understand the dynamics of property, how when you invest, you pay less tax, you can pay down your house, you can use that money to fund the next 12 months of the investment property. There's ways and means to make this. And, you know, the average person that I see out there, and I use $50 as a really simple basic, it's to carry and hold an investment property for most working families that I deal with, you know, it's around 40 or 50 bucks a week max. Some are less, some are positive, some are neutral, you know. So I think it's key for not only when they do the financing with Lisa, it's also key that you understand how the numbers work inside a property. And it takes that little bit of fear away about having more debt, right? So we'll touch more on that on Wednesday, the 9th November at our Property Mastermind night. We'll race into this in a bit more detail. So for now, Lisa, appreciate your little update on the finance and the bank side of things. And let's hand it over to Zach. Hey, Zach.
Hey, how are you, Tony?
Cool, buddy. Cool. Tell me, what's happening out in the wild old building world that we all operate in out here? I know the big commercial space pretty well, but you're really right in it in the home builder space, mate. So we know about materials and shortages and supplies and labour and stuff, mate. How are you seeing it on the ground from sort of Luxton's perspective?
Yeah, well, yeah. Now, look, it's definitely been wild and woolly, and a market which has just been really, really unexpected, I guess, with the supply issues and the like. Now, look, the good news is supply issues of materials has really flattened out. We don't have issues with supplies. The only issue that most builders have now is with labour, but that's not just pointed towards our industry at the moment. So I guess what we do at Luxton Homes is there's a lot of forward thinking, a lot of forward planning in regards to the amount of homes that we release to site every month. So builders that get stuck or have issues releasing too many jobs to site. We try and release somewhere between 35 to 45 jobs to site every month. And what that allows us to do as a business is to forward plan, forward order our materials, forward order our labour requirements, and having really long-term relationships with a lot of our major suppliers has been really advantageous. So look, we've got some really great stories at the moment from a building point of view and from a build timeframe point of view. In September last year, when we had our last lockdown and where construction was actually stopped, our building times went out to around about 180 to 190 days for a single. Now that's way too high for us. It took us probably 2 or 3 months and then the Christmas period to recover. But we're now handing over homes between 112 days and 135 days. So, you know, the 112 days is one out of the box. We did 2 of them last week, and we were really patting the construction guys on the back for what a great effort that is. Because as investors and as, you know, a wholesale builder, we want to ensure that one, it's a really enjoyable process, the building side of things. 2, that it's a nice, quick, fast process, so that as soon as possible, you guys can get tenants into your properties and start reaping those returns. So for us, timing is everything as a business. As many of you know, most builders, us included, we don't really start making a profit on any of our homes until the last couple of stages of building. So for us, you know, time frames are really, really critical. Hitting our forecasts are really, really critical. But at the same time, ensuring that what we deliver is of the highest standard. So our protocols that we've put in place more and more now in regards to our checks and balances throughout the building process have been terrific, and the feedback's been really, really great. We've got a maintenance team who right now at the moment are actually twiddling their thumbs, which is a good thing for us. He's being paid to do not much. And the reason why I know that, because I was away last week and came back after all the rain in Melbourne. I said, God, what was the maintenance calls out like? What was going on out there? And he said, we did not have any issues. So the directors pride themselves at Luxon Homes on delivering a home, which is just absolutely second to none. There's always going to be issues every now and then, but it's how you deal with them as a builder. And you know, we've done things of late where someone was upset because the nature strip grass had been destroyed through the build. It's not our responsibility, but we go out and we change it, we fix it, we lay new grass. So look, for us, it's about working with like-minded people like yourself, Tony, like Liz at Unique, who's one of our major partners and most important partners throughout the business, and also working with people like Lisa, who I personally have been working with over the last month or so as well for my own my own investments. So yeah, look, building wise, there's still challenges, no doubt about it, but it's how you deal with those challenges, and it's ensuring that as a company, our growth strategy is one that is regulated. It's no good, you know, selling all these homes and not being able to deliver on them. So Luxon Homes, we say no to opportunity more often than not. We do one thing, and we do one thing only, is build detached house and land. So look, as I said, Tony, as I said at the start, it has been wild, and the ride continues. But the directors are doing a terrific job of maintaining those build times and the service level, and also the level of, I guess, the quality of our homes. We feel really, really strongly about.
Well, a couple of key points there, and it's a great summation of Luxon and the actual value that you bring to the table, because one of the things that we do in amongst our group here is that we're very like-minded people. We've got the customer's values at heart. We want a good experience for our buyers and our purchasers, and our role is to help guide, teach, educate, hold their hand. When we've got an issue, let's front up and face it, let's get it fixed, etc. That's how we work. But you're talking 112 days to 130 odd days there as a build time. It's really important for an investor, because the investor may be carrying a bit of holding interest during the build process, right, when they're making their stage payments. And the other advantage for the investors is that the faster the home gets built, the quicker they can get a tenant in, because you don't really claim a lot of your deductions until you start getting rental income from the property, right? So if you've got a really good quality builder who's knocking off timelines, because most builders can drag out 6 months, 7 months, 8 months, 9 months. You're here talking 4 months, 5 months type, you know, much shorter time frames, purely because I think, you know, the business model that you've got's pretty switched on. That's an advantage to the investor, because it means less interest that they'll pay. It means faster they're going to have rental income coming through the door, and the faster they're going to be able to start claiming the deductions and start paying less tax and start getting a bit more money back in their pocket, right?
No, and that's exactly right. Look, the delays that we see amongst some competitors, and look, sometimes there is an issue, but it's the biggest delay that you have is actually getting on site. So some of our major competitors, some of the major volume builders out there, following land title, they're not hitting site for up to anywhere from 16 to 22 weeks. Whoa. From land settlement. So then once again, you've got those holding, you've settled on your block of land, you're just paying interest. There's a lot of time there. So we're right here at the moment, we're averaging between 4 to 6 weeks. And how do we do that? We do that by, one, having great relationships with our land vendors that we deal with. And for instance, if Liz was to bring land to us, as she does sometimes, she's got a great relationship with land vendors. We can get on site once just prior to land title. We can do our soils, our surveys. That saves you about 2 or 3 weeks. And then going back to that first point, where we limit the amount of jobs that we send out every month. If our site managers don't have the capacity, we will hold that job off. But we make sure that if we say, Tony, your house is going to be starting in 4 to 6 weeks, it'll be starting in 4 to 6 weeks. So it's that time from, you know, dealing with Lisa, getting your finances done, making sure they're ready for land title, Luxton doing all their due diligence, getting soil surveys, permits, developer approvals, and then on site. Our biggest, like what Lisa was talking about before, paperwork and things like that, that can be the biggest hold up to getting started on site. So if everything, all the ducks are in a row, 4 to 6 weeks for us to get on site plus that build time, allows people to have a really, positive experience when building, because nothing worse, especially with your first home, if you have a negative experience, because, no one's going to want to go and do it again if it's not a great experience. So.
Yeah, and the thing for us too is that we don't want the clients to feel that way, because we're the ones who'll get bombarded with phone calls and you, right? So
100%.
But when you've got the good relationships, right, that's when we can jump on the phone, we can talk to people, we can smooth things over. And at least you see me do it every day of the week with my clients, not only just with bills and with land titles, but also with settlements and all sorts of things that we deal with. It's just a matter of trying to make things easier and just put, the way that I teach and coach inside my business is purely step by step by step by step. I'm just going to hold your hand, next step here, next step here, next step here, right? And then once my clients have been through the process and the property's been rented out for 6 months, quite often they'll sit back and go, oh, well, gee, if it wasn't that hard after all, it wasn't that bad after all, right? But it's really, a matter of helping people with the mindset around property and investing. And I think any investor that may be listening here at the moment should be sitting there and thinking about, why do you really want to invest? What's the end goal? What's the bigger purpose? What are you trying to do here? And for most people I see, the goals, it's twofold. One, they know that superannuation is not going to be enough when they get to retire. I'm not going to bang on it about tonight, but I'm giving you the mail now, and this is not financial advice, folks, but I think there's some really big stuff going to happen in the stock market in the very near future. That's all I'll say on that tonight. Do your own research, do your own due diligence, and make your own decisions. But when shit hits the fan with superannuation and people are at retirement age and they lose 30, 40, 50% overnight, what do? They're stuck. Yep. So I'm teaching people, buy your home, have your super, get 1 or 2 investments, start learning how to pay less tax, use that tax to get your house paid off as fast as you can. So when you do get to retirement or near retirement, you're not going to be a sitting duck just sitting there waiting for superannuation and watching, being at the whim of the stock markets, because there's no control. You don't control world economies. You don't control changes to tax laws. You don't control events that happen around the world, because that's what affects the stock market, right? But with property, we know property in Australia, it's safe, it's secure, it's been a good long-term investment. The other thing we haven't touched on tonight, there's 195,000 immigrants being brought into this country in the next 12 months. And my question to the viewers out there is, where are they all going to live? We've already got a major rental crisis now. It's hitting the news. I sent out a few emails in recent times. They're banging on now that I think it's around 46% of properties in Melbourne now, you can't get under $400 a week. And I've heard of people telling me they've been to open houses with 20, 30, 40, 50 people lined up trying to get one rental. So if you're an investor, one of the fears, again, I think has been, what if it doesn't rent out? Well, we are in a major rental crisis and they need investors. The government needs people to invest to provide housing for people that can't afford to buy homes. So, folks, we're pretty much moving close to our 7:30 timeline, or it's about half an hour, got a couple of minutes to go. Any final comments, just quickly?
No. Yes. But Zach, that's amazing. For those of you that don't know out there, what's happening with other builders, to be able to complete a home within 112 to 135 days is absolutely unheard of.
It is.
Absolutely unheard of. And those rentals that you're talking about, Armstrong Creek that we spoke about earlier, most of the properties that we've actually had go up for lease, they've not even been advertised. Like you say, they've been leased out beforehand to wait lists.
I've got clients right now, spoke to this morning, settling on November the 14th. They've got a signed lease in play already. It's done, dusted, right? So that's the target. Well, look, folks, Wednesday, the 9th of November, Lisa, Zach, Liz and myself are going to put on a dinner. I think Luxton are picking up the tab for this one. I heard a rumour. I don't know about that, but I think so. We put on a dinner and a few drinks. We do it in a nice place in South Melbourne, which is central to people around Melbourne. So for any of the listeners that are out there, if you want to know a bit more about it, DM me direct or message me direct. If you've got my mobile, call me direct. If you're on my database, just send me an email, talk to me direct. I'll have a brief chat over the phone with you. I'll send you a little bit of information. And if you qualify, we'll invite you to come along on the night, because when we're on that particular night, we're going to really expand on these areas where we see good capital growth potential, good rental gains, where there's big infrastructure coming behind. And we'll have a few select opportunities on the night that'll only be available for people in that room. So if you want a bit more detail, you want to come along, there's no pressure to buy. We're just going to sit and really delve in a lot more detail than we did tonight. If you're a thrill seeker out there and you see the opportunity in property and investing, then touch base with us. You can put a link in the chat, pop in the chat here, or you can just put a comment down below or email me or call me direct, folks. So tonight, I'd just like to say thanks, Liz. Thanks, Lisa. Thanks, Zach. Great having you guys all on board. And we'll see you on Wednesday, the 9th of November.
See you, everyone. Thanks so much, Tony.
Bye.
Thanks, everybody.
Bye.
Cheers.
Bye.
Okay, bye.